Barrick Gold drops its year end and gold crests $1,900 an ounce. You're listening to Kitco Roundtable. I'm your host, Michael McCrae. Kitco correspondent Paul Harris is in. Traveling, Paul, how are you?
Hey, Michael. Very well, thank you. How are you?
Very good, very good. Off the top, I want to remind listeners, editor Niels Christensen has spun off his own show to talk macro. It's a fantastic listen with great guests. Name of the show still to be determined. Look for a show to drop into the feed each week. Our guest this week is a person who is the center of two of mining's biggest trends, the need for battery metals and decarbonization. It's Lyle Trytten. Lyle, welcome to Kitco.
Thanks, Michael. I'm excited to be here.
Lyle has worked for nickel giant Sherritt. He is now a development manager at Giga Metals, and he runs his own consultancy. Lyle, we're going to get into a big discussion about nickel. We're also going to talk about decarbonization. By way of introduction, what project are you working on now that is exciting you?
I'm working with Giga on the Turnagain Nickel project, which is really exciting. It's been around a while, but as a lower grade, large deposit, it's really got the potential to pop with higher nickel prices. So that's pretty fun to work on.
Let's turn to macro, and a macro week it was. On Thursday, we had a nice rally in gold, silver, and platinum. You saw gold through $1,900 an ounce. That's right, $1,900 an ounce. Silver to $24 and platinum to $1,000. A mix of geopolitical tension and inflation pushed metal prices higher. The U.S. insists that Russia is poised to invade Ukraine, which has intelligence to back up the claim. Russia still insists no plans to invade, but despite having amassed over 150,000 troops on Ukraine's border. On the inflation front, WTI and Brent oil pushed through $90 a barrel. Home sales data from the National Association of Realtors came in stronger than expected. Paul, let's start with Barrick Gold. What did Barrick tell us this week?
Well, Barrick put out its 2021 financial results, and the headline number there is its net earnings fell 13% to $2 billion US dollars. But the main thing I think came out from Barrick was it's increasing its returns to shareholders. It's sharing the wealth to boost its sustainability. So as part of that, it increased its dividend to 10 cents per quarter from 9 cents previously, and announced a new performance dividend policy to begin this year, which will be based on the amount of net cash on the company's balance sheet, which will potentially add up to 15 cents per share onto the base dividend in the event that its net cash position increases to $1 billion. In a further attempt to woo investors, Barrick also announced a $1 billion share repurchase program because it believes its shares are trading in a price range that does not affect the true value of the company.
And Cisco, Paul?
Yes, Cisco had quite an uncomfortable week by the looks of things. Cisco Mining said that it will develop the Winfield Gold Project in Quebec and Canada on its own as it terminated joint venture negotiations with Australia's Northern Star Resources. On the day that gold broke $1,900 per ounce for the third time ever, the company's share price was down more than 10%. Northern Star, however, remains a debt holder of the company through its $154 million convertible senior unsecured debenture, which is due December 2025.
And we have a past guest on the roundtable, World Copper, and its PEA.
That's right. A couple of interesting copper stories this week. World Copper reported a PEA, preliminary economic assessment, for its Escalones project in central Chile for a conventional 50,000 tons per day heap leach SXEW processing operation. The company said it would produce an average of more than 52,000 tons per year of copper for 20 years, following an initial capital investment of some $438 million US dollars. The project would yield an after-tax internal rate of return of more than 46% at a $3.60 per pound copper price assumption. The company is now moving into a phase of infill and expansion drilling. And I spoke with Nolan, and he said the company sees a possibility that the resource could double due to the potential of the Mancha Amaria area there. Another interesting piece of news, and another big drill hit coming out of San Juan, Argentina, where Aldebaran Resources reported 707 meters grading 0.51% copper equivalent from the first hole completed in its 2021-2022 drill program at its Altar copper gold project there. where they're beginning to test the radioporphyry. The radioporphyry is not included in the current resource estimate of Altar, so there's a lot of potential there. Aldebaran has 3 drill rigs running on radio, presumably until at least until mid-year.
And lastly, Hecla is growing its resources, Paul.
Yes, exploration seems to be a major theme for the mining companies now. A week or so ago, Barrick Gold announced a 150% increase to its reserves, and now Hecla Mining has just reported its second highest silver reserves ever in its 130-year history, as they increased to 200 million ounces. More than replacing gold and silver production. Its gold reserves also increased 14% to 2.7 million ounces. The company plans exploration spend of about $45 million this year, with big spends planned at its Casa Berardi mine in Quebec in Canada and at Greens Creek in Alaska in the United States, to again focus on replacing production and expanding the high-grade reserves at both mines.
The piece of news that stuck out to me, and I'm going to warn you, Paul, and I'm going to warn you, Lyle, I have a bit of a quiz here for you, or a bit of a fun guessing game. Glencore, one of the world's largest global diversified natural resource companies, just had a monster year end, of course, them being exposed to all of the battery metals. They announced that its net income was $9.1 billion. Its net income was $9.1 billion, a 267% increase over 2020. Now, they broke down the commodities, Lyle and Paul. That was coal, cobalt, copper, nickel, and zinc. Coal, cobalt, copper, nickel, and zinc. All of them had year-over-year price increases. Which of those commodities had the biggest jump? Paul. Oh, wait, maybe we'll give it to the guest first.
Go on then. Yeah,
give it to the guest first, Lyle.
I hate to do this as a battery metals guy, but I think it was probably coal.
What is your guess, Paul?
My guess was coal as well.
On the money, guys. 125% increase. Coal was a top increase here. Okay, now this will be the tricky one. What out of coal, cobalt, copper, nickel, and zinc, which one performed the least well over that year-on-year basis? Lyle.
I'm going to go with zinc, but I'm with a bit of a question mark in my voice.
No, okay.
I'm going to go with copper because the copper prices remain relatively stable over the past year.
I want to thank you, Paul, for making Lyle look so good on this podcast with his with a 2 out of 2 win here as well too. Congratulations, Lyle. Yes, zinc. Zinc only managed to rise 32%, whereas I see that copper was about 51% that they showed on their year-on-year that went. We're going to go from a quiz. And what we're going to do is we're going to bring you back in, Lyle. I want to bring us up to date with Giga Metals and what stage is it at. It's really been a company that has been at the forefront of nickel and something that is driving a project in Canada.
Yeah, so we've been driving this project quite a long time, Michael, as you know. Right now we're launching the pre-feasibility stage where, we've done a few preliminary economic assessments over many years. We understand the deposit really well. And we're really excited to be now moving forward to that pre-feasibility where we're looking to build a facility that will produce 1 million tons of nickel over 30 plus years, sort of a generational kind of project, which is really impactful for the local region, the province, the country. It's still a bunch of work ahead of us, of course. It's a big project and it'll take a lot of dollars, but what we've got there is a lot of tons in a very simple standard project in terms of it's a very straightforward mill process, makes a very standard concentrate that can go to traditional smelting like we do in Sudbury, or to the newer hydrometallurgical approaches. I've got a hydromet background. There's no problem in taking this concentrate through a hydromet route as well on the path to battery metals.
What's the infrastructure around the project?
It's kind of remote, but it's not that big a stretch for us to get the BC Hydro line extended up to site. That's about 160-ish kilometers. That's a really important aspect for us to get hydropower in there. It's not like a facility, say Raglan in northern Quebec, that's really remote and has to rely on fossil power, or even Western Australia. We've got that great BC grid is pretty close by.
I want to step back and I want to talk about the nickel sector at large, and also just talking about that hydropower. We've seen so much M&A into Canada with companies moving in. They just want to take advantage of ESG, and they also seem to want to take advantage of that hydropower. If you want to make a company, if you want to make a mine with a low carbon output, how big advantage is it having something on the hydropower grid? And are there mines that are going to be outside of that where they're going to have to rely on, say, renewable energy sources, whether it's going to be wind or there's going to be solar? Are they going to be able to catch up? Or are they going to match somebody that's going to be on a hydropower grid?
The hydropower that we have in Canada, and it's in all the primary mineral regions that we've got, Quebec, Ontario, Manitoba, BC, is a huge advantage because that's 24/7 power with a really low carbon footprint. And, the mining process, not so bad. It's a pretty low carbon area for the mine itself. But that milling process where we have to grind up our sulfide ores, that's pretty power intensive. It takes a lot of electricity, and being able to do that with green power is a phenomenal advantage for us that Canada can really sell to the world. In a lot of other jurisdictions, you just don't have that, right? You've got some great green power in Northern Europe, that's fine. But even, Australia is a great producer with a lot of renewable energy potential, but they don't have the hydro potential. And so they can add a lot of solar, but solar is intermittent and you still have to have fossil power to back that up. And so their grid intensities and their local mine intensities are both going to be substantially higher in carbon footprint than projects in Canada tied to the grid.
You've seen so many projects that have actually been leading with. You think of Nouveau Graphite in Quebec. You think of the copper project. The name escapes me, but that's with Pierre Lassonde out of Saskatchewan. Also, when Agnico and Kirkland Lake tied it up, they were very much leading with the ability with be able to build low carbon intensity or low impact gold, just given the amount of projects that they have in Quebec. Lyle, turning to a study that you did, you were talking about nickel in Southeast Asia, and Southeast Asia is just like, it's huge as far as the amount of nickel development that's going on there and also how they're endowed. But you put in your report, you were stating that the carbon intensity is at the extreme in that region.
Yeah, that's right, Michael. It's a great physical endowment they have in nickel at the surface, but the ore types that they have and the infrastructure they have don't lend themselves to low carbon production. And there's really two factors going on there. Most of that development has been in what we call nickel pig iron. It's the same thing as ferronickel, just a lower nickel grade in the product, which is a power intensive, electricity intensive smelting process. So most of these facilities are tied to coal-fired power plants. In fact, individually built coal-fired power plants to support the new nickel smelters. And so that's a very high carbon power source. They also have a lot of carbon emissions directly from the process. The chemistry demands that they add carbon in the form of coal or petroleum coke. And that requires then that's how they reduce the iron and the nickel to make their product. And all that carbon leaves with the oxygen from the iron and nickel to make CO2 exiting the smelter. And so, the chemistry and the power source combined make them very high carbon intensive facilities. There's been some newer facilities. They're just starting up a new high pressure acid leaching facility in Indonesia as well. It's a more carbon friendly technology. It doesn't require as much electricity, but they're still relying on coal-fired power grids. And when you have those kind of projects, the reagent usage, they have to add a lot of acid to do the chemistry that they then have to neutralize. And when you add limestone to acid to neutralize it and ultimately produce your metals, you're making a lot of carbon dioxide emissions right at site out of the chemistry as well. So, they're never going to be able to compete with the kind of operations that we can develop here in Canada with both our low carbon grids for mining and milling, but also the smelting processes we have.
Paul?
I'm going to play devil's advocate here a little bit, Lyle, but the one thing they do have, they have volume, yeah? And as we talked about just a moment ago, Glencore's making out like a bandit because it's got coal, which is obviously carbon. So does volume trump everything at the end of the day?
I'll say this. There's no question they're going to make money. They're going to make a lot of money. They've got a relatively cheap to build process. They've basically made it down to Lego blocks now. They understand exactly how to build these facilities in the most economic fashion. And they're relatively straightforward to run as long as the coal price is reasonably low and nobody cares about the carbon footprint. But as people start to care about that, they're going to be in a bit of a dilemma. And that's where we're going to see the differentiation. We're not going to shut those facilities down. The world needs a lot of nickel.
I was wondering again how that actually gets to automobiles, Lyle, because so many people right now are just there's all of the regulations that are coming in just regarding your carbon footprint. Are those batteries going to be able to get out of China that are eventually made out of that nickel, or is there going to be some accounting for them?
I think you're going to see a real push to get those batteries moving from China into the rest of the world. But we're announcing a lot of battery factories in North America and Europe right now because our governments and our industries, quite rightly, are concerned about the strategic supply issues of putting so much of their decarbonization agenda in the hands of the Chinese. And I think we're going to see a lot more domestic production. The reality is that we'll see some of that flowing out, but we're going to have to rely a lot more on raw materials that we can source ourselves.
Paul?
How do the rules of origin impact EV batteries, for example? If you make the battery in China, your battery is made in China. But if the nickel comes from, let's say, Indonesia, that's obviously a key component of the battery that's not from China, but it's not necessarily a big component by volume or value, but it could be a critically important component from the point of view of the final, the end use customer, the purchaser. How, rules of origin basically allow the battery manufacturer, not perhaps willfully, to hide where hey, this has got dirty nickel rather than your clean nickel.
Yeah, so we see really three separate movements converging here to really illustrate that issue. The EU is moving forward with battery regulations that will require carbon footprinting of the batteries. So you'll have to declare as a battery manufacturer the carbon footprint of your entire supply chain, which means you need to work with your producers, your suppliers, and their suppliers and their suppliers. And you're going to get a very good understanding very quickly of how that looks. And ultimately, phase 2 of their battery regulations is going to require not just footprinting and declaration, but actually classes of batteries. You will only be able to sell batteries below a certain carbon footprint. The EU is always a leading jurisdiction in these areas. North America usually follows a few years later. But along with that, we're seeing the Global Battery Alliance really working right now on the rule book for this carbon footprinting. It's work that I'm actually engaged in. So I've got a couple of 4-hour early morning meetings next week looking at the rules that we're going to establish to document the carbon footprint of batteries, including nickel, cobalt, lithium, manganese, the phosphorus, all the components, regardless of battery type, so that we have a common playing field and everybody follows the same rules that attributes the right amount of carbon footprint to these. And it's not going to be just a nickel issue. It's going to be every component of the battery. And that's going to be really important. And we're seeing consumers care, right? As a nickel guy, ultimately, I think we should care as much about the stainless steel that we have in our fridges and our utensils as we do about the batteries in our cars. But consumers are concerned about cars right now. And the kind of people that want to buy electric vehicles don't want to buy electric vehicles that have a huge carbon footprint behind them. That's their ethos. And so there's a lot of pressure on the car makers to source the best nickel that they can here in North America and Europe. It's different pressures in Asia.
So will that result in there being a sort of bifurcation in pricing that, clean nickel or green nickel or, low carbon nickel will be able to demand a premium over nickel that's been produced by HPAL or with coal-fired power behind it?
I certainly believe so. My discussions with Benchmark and Wood Mackenzie and others, they're reluctant to commit to that yet, but we already see today when you trade class 1 nickel, depending on your origin and your credentials and your form and stuff, you get different levels of premium or discount to the nickel price. The LME nickel price is not actually what nickel sells for, right? So if you're a great producer of a high quality product, you're going to get a premium to producers of a lower quality product. And quality can be pretty broadly defined. So I think you're going to see those premiums reflected quite significantly between the best and the worst producers for the battery market, for sure. Whether that reaches down to the stainless market, I think that's a ways away yet.
Thank you.
Lyle, what's a full supply chain carbon accounting? So
it's really important that we start talking about what I think of as kind of the dirty little secrets of the industry. All of our producers like to talk about their scope 1 emissions and their scope 2 emissions. Those are the emissions we generate at our sites or from the imported energy we use. But what we're really not talking about as much is what's called scope 3 emissions, our full supply chain. And that's where we can have a really significant impact. You might have a facility that's got very low emissions at its own gates, but it uses a lot of reagents or consumables that have a very high carbon footprint behind them. And when you wrap all of that in, it can be a really big change. I was looking at a project recently. They just released a life cycle analysis this week, and 50% of their carbon footprint for the project was due to the reagents that they use in the flotation process. The fuels for mining and the electricity for the mill were less than 50%. That's an astounding gap if you only talk scope 1 and scope 2. It's really important that we look at this. And that's why the Global Battery Alliance is looking at that full life cycle analysis type approach. And companies in the space, the producers, the miners, the processors, the smelters, they've got to start looking at this much more intensively. The institutes have done a good job at building industry-wide LCAs, but it's going to become very important for companies to be very familiar with this for themselves and to be doing their own independent LCAs so that they can go and talk intelligently to their customers who are demanding information.
Lyle, do we have the right price for nickel? And last I checked, it's just about $11 a pound, $11. But do people have confidence that they can invest in mines in North America and develop them?
Well, I think, there's no question that the kind of price we have today is sufficient to make any half decent North American project economic. We've got some projects that have sat on the shelf for a long time because they don't make a lot of sense at $5 nickel. And that's why a project like Turnagain hasn't been developed yet, right? At $5, it doesn't make a lot of sense. But when you've got 1 million tons, that price differential can result in a lot of earnings very quickly. Whether there's trust in both the price being supported at that level in the long term, because we're making these investments for 30-year kind of projects, and the downstream processing being put in place. I think we're seeing right now that the miners haven't jumped in because there isn't a high degree of trust that all the pieces will be there, because it's not just a mining story. When you're in the nickel business, it's equally about the processing, and there simply isn't enough processing capacity. If we were to build, we were talking earlier about these 4 lower grade projects in Canada. If we were to build all of those starting now and bring 150,000 tons of nickel supply to the market in a few years' time, where's that going to go? There's no capacity in Canada to actually treat that and process it into the raw materials that the EV industry demands. So that whole midstream processing sector also needs to grow. And it's not much use building a mine if you don't have somewhere to process it. So there's a whole industrial strategy component that's really important for North America and Europe to wrap their heads around, how they're going to incent the entire supply chain, not just give a bunch of money so somebody will build a gigafactory. A gigafactory is useless without raw materials. You really need to develop that running supply chain in front of it.
What type of nickel is needed for making lithium-ion batteries? Are they a higher purity? Or are they higher chemistry, say, like lithium itself?
Yeah, so we need super high purity for the metals that go into lithium-ion batteries. That purity drives performance and longevity. If you don't have good purity, batteries don't last as long; they start to fail. And that's why you see a lot of the nickel that's been used in them in over the last several years has been developed from what we call class 1 nickel, which is, high purity metallic nickel, 99.8% nickel or better, that's then dissolved and precipitated as a nickel intermediate for the batteries. And that whole process of making metal and then making the battery materials is a great set of purification steps. And as you go through that, it's expensive, right? And so now we're starting to see movement to take nickel intermediates like mixed hydroxide precipitates from the high pressure acid leach facilities or mixed sulfides or nickel matte and leach them and directly make the battery materials out of it. It's a little riskier to go that route, but it's the same chemistry as we use in a metal refinery. You're just producing a different product instead of electrowinning or reducing a nickel metal. But you need that super high purity. You need to get the nickel away from copper and iron and a bunch of other things, zinc as well. These are all impurities that can interact within the battery and create problems. So that purity is really, really critical.
Let's turn to our number of the week, Lyle. We always start with our guest. Lyle, what's your number this week?
So my number is 7, and it's 7 for 2 reasons. I'm tracking right now 7 significant Canadian nickel projects that together have 7 times the declared resources of all the US projects that I'm tracking. There aren't as many in the US. And when you think about, we've got 7 times more nickel that's not being produced today in Canada than they have in the US, and the US being 10 times bigger in terms of people and car production, there's a real trade issue arising if the US producers and governments are going to look to strategically source and we call it ally shoring the production. They've really got to look north. We've got the raw materials that they need. They're short on nickel and some others, and we're going to need to develop those partnerships because that 7 becomes 70.
Can you name those 7?
I hope so. So Turnagain for sure.
Yeah.
Baptiste, I understand you talked to the FPX about Baptiste recently. Canada Nickel's got the Crawford deposit, very similar to Turnagain. The Dumont deposit in Quebec. Those are the 4 big ones. And then there's some smaller ones in Manitoba. We've got the Makwa-Mayville deposit. We've got the Monago deposit. That's 6. And there's one more. Oh, Eagle's Nest, Noront. Norant's a big story, right? That's not a
heard
huge
of it.
deposit. Yeah. But you know what? There's been a big bidding war over Noront, but that's not a great nickel project. It's great quality, but it's not that big. It's 150,000 tons of declared nickel resources versus 1 million tons in some of these larger projects. Great quality. It's a fantastic ore body. It's just not as big as we'd like to see.
Paul, your number of the week.
My number's a little bit bigger than that. My number is $30 trillion US. That's the amount of investable assets owned by baby boomers that women are poised to control a large percentage of, a large portion of by 2030, according to CNBC. Why did I pick this number? Many companies have asked me about how they can reach and engage with millennials. Nobody's ever asked me how can they reach women investors. So if women will increasingly be holding the wealth, snapping out of gender assumptions about who investors are, will probably be a good start for the junior sector and the mining sector if they do indeed wish to raise money in the future.
My number of the week is 141%. On a yearly basis, the Chinese Association of Automobile Manufacturers reported that new electrical vehicle sales was up 141%. Again, electric vehicles look like they're here. And I think with these gas prices, they're going to continue to get momentum. More consequentially, the car manufacturer said that companies do not expect the removal of subsidies to have any material bearing on sales in the long run. That number was reported from BMO. As we head out, Lyle, is there anything that you'd like to announce regarding Giga over the next 12 months?
I really can't announce anything. Of course, standard disclaimer rules apply, but we really expect to be getting our pre-feasibility study done and moving this project forward. perhaps with a little bit sharper pencil than we used in a pretty conservative preliminary economic assessment. And we really hope to be advancing that project to supply our North American needs.
Follow me at Michael McCrae. McCrae is with 2 C's. Niels is at Niels_C. Paul has got a new handle that is CGS 2022 Gold. And Lyle, how would you like people to get a hold of you?
Easiest place to find me is on LinkedIn. Hit me up there. That's where most of my nickel-related content is delivered.
If you like what you hear, tell a friend. Don't forget to subscribe. On behalf of Paul Harris, Lyle Trytten, and myself, have a pleasant weekend.